when we're looking at this, sometimes we go through these numbers. Oh, well, Sonny, I make 100,000 and I have 80,000 in debt. My house is worth $1 million, or let's be cheap and let's just say it's worth 800,000, right? And then I have my two kids, that's 200,000. And then people are adding up these numbers. I don't even remember the numbers I just told you, but let's just say you add them up and it's 1.5 million or $2 million. For whatever reason, people get terrified when they hear that they are worth 2 million or a million or more in insurance. You got to understand your value. You got to understand your value. So we got to make sure we address this, you guys. Number one, $1 million to $2 million is not a lot of money. Number two, you got to understand the purpose. And when you understand the purpose, you feel more comfortable doing what you need to do to take care of it. And number three, it's been said that the average American overestimates the expense of insurance by 3 times the cost, right? So that means you think it's 3 times more expensive than what it really is, okay? So here's the deal, y'all. I wanted to give y'all that perspective, but also I remember I was meeting a gentleman. So this person wasn't in the Bay Area, but check this out. I was meeting a gentleman, and and by the way, before I say anything else about these gentlemen, there's a lot of women, not stay-at-home moms, although that's cool too. There's a lot of women who are making a lot of money, and whether they're single moms or spouses, they ain't getting no insurance either. So that means the household is still underinsured. All right, and I'm just tired of that part. Okay, so basically, what happened is I met a gentleman, and him and his wife together, they were making close to about $750,000, and they were doing okay. And what I mean by okay is their debt was paid down. They were able to afford their mortgage. They were able to afford their children's schooling. So they had a lot of money after the fact, right? So they were saving a lot of money. And for whatever reason, a lot of people think that once I have a lot of money, I no longer need insurance because I'm self-insured. I disagree with that. And let me tell you why. There's levels to insurance. So this will go back to what we talked about with Dave Ramsey's and the other lady, Susie Orman. So I'm going to say something that might be a little controversial to y'all. They're right about what they talk about at their level. All right, I want you to think about what I just told you. Susie Orman and Dave Ramsey's is right about what they're talking about when it comes to insurance at their level. So what do I mean by that? Well, if you just want to be insured for the cheapest price possible, then yes, you want to go the term route. And then when the term's over, you're good to go. You have cash available. So that's it. But here's the truth of the matter, y'all. When it comes to life insurance, I would say there's about 4 levels of life insurance. Level number 1, you have people that just think of burial insurance, right? I just want enough insurance so that when I pass away, my family doesn't have to pay for my funeral. That's level number 1. That's ground level. And so that's where you get people who are just getting the 10,000, the 40,000, the 50,000. That's level 1. Level 2 is insurance to pass on wealth, right? Replace the income. So this is the type of insurance that Dave Ramsey's and Susie Orman is talking about. So again, they're not wrong when they're talking about level 2 insurance. But that level could not be applied to level number 1. And level 2 could not be applied to the other 2 levels that we're about to talk about. The third level of insurance is insurance for estate planning. Did you know that there's people that have a net worth between $5 million to, I would say, probably about $30 million that use life insurance for estate planning? So if that's the case, doesn't that go against what we just mentioned, where if I make a certain amount of money, then I'm self-insured and I don't need any more life insurance? Again, when we're talking about estate planning, this also doesn't mean it's just for your personal life. We can also talk about estate planning for businesses or succession planning. Okay, so that's level number 3. Level number 4 is leverage. So you can use insurance as leverage to where you could borrow against your policy and purchase income producing assets. You can use your life insurance as leverage to add value to your business, and therefore you get to sell it for a higher profit. A lot of people don't know that, right? You can also use life insurance as leverage. You see my point? So at each level, the reasoning and the thought process behind life insurance is completely different from the prior levels. So I can't apply level 1 to level 4 because level 1 says, I just want to go ahead and pay for life insurance to where it can pay for my burial. Level 4, I'm trying to leverage, so I don't give a damn about that, right? Or better yet, level 2 is the most common knowledge of life insurance, but it's not the only knowledge of life insurance. So the bigger mistake with this one is you have even agents that are insured, that are licensed, and they only talk to people about level 2. And that's not the crime. The crime is they apply level 2 as if it's the only level of insurance. That's the crime. So if you didn't learn anything else today from this podcast, learn there's 4 different levels of insurance, and they all are based on what is your outcome. What are you looking to accomplish? So now that brings us to the types of insurance. The first type is term. So think of it like real estate. Term insurance is where you're renting insurance and you're renting it for X amount of years. So you could do it for 5, 10, 25, 35, sometimes maybe 40 at the max, right? The older you are, the less time you can rent it for. And generally speaking, this is the cheapest amount of insurance. And you can get the most insurance for the cheapest amount. However, it's renting, so once that time frame is over, the insurance is gone. And you don't get your money back unless you get what's called return of premium. And so they charge you more because you're getting the money back. All right? This level of insurance is the type of insurance that Susie Orman and Dave Ramsey talks about the most, right? And again, they are correct in their assessment for this level, okay? Now, the other type of insurance is a whole life or permanent insurance, but that has like 4 different tiers. You have whole life, you have universal life, you have variable life, you have index universal life. So there's 4 different tiers within the permanent insurance realm. But the main purpose of permanent insurance is so that you can permanently have insurance, period. That's it. So now you don't have to shoot dice and say, okay, I'm gonna die in these years. I might not, right? So now you never have to play that guessing game. But here's the key. Because it's permanent insurance and it lasts your whole life, well, now the premiums are more expensive. What can we relate this to? Well, if you own a home versus renting a home, owning a home is going to cost you more money. Why? Because you're responsible for the upkeep. So that means you're going to have to pay for the garbage. You're going to have to pay for the maintenance of the lawn. You're going to have to pay anything that breaks. You're going to have to fix it yourself. Whereas when you rent, all you got to do is pay for the rent and maybe a couple utilities, right? But if something were to break, you don't pay for that. You call the landlord. But when you own the home, it's all on you. Well, the same principle applies to permanent insurance. Now, here's the deal. Why does permanent insurance cost so much more? It costs more because what they do is they add a savings account connected to it. The original reason why they added a savings account to permanent insurance was just so that your money accumulating interest so that the policy could last beyond a term policy. So if we were to compare a permanent policy to a term policy, and you say you bought a term policy for 20 years and you got a permanent insurance for 20 years, well, the term policy is going to be cheaper for those 20 years. But because of the interest that you earn in the permanent account, after 20 years, you no longer have to pay, but the insurance will keep lasting onward as long as you live, theoretically. Based on that strategy, over the lifetime of which you had that life insurance, it comes out to be cheaper than the term. But you gotta live for that to happen. Now, what if you die in between time? Well, then you get all your expenses reimbursed. Your family gets it. Right? So I just want to give y'all that information so you guys can understand basically the difference when it comes to life insurance. I mean, we could break down all the different variations of permanent insurance later, but I just want to give you the basic difference so you had an idea. Okay? So with that being said, I want to give y'all some stats on this as well, because check this out. This is why I'm bothered behind this kind of stuff. So right now in 2022, there are 106 million Americans who do not have life insurance. Not even like a burial policy, not even term, right? So my thing is, I'd rather you have some than none. 50% of Americans, listen to this, y'all, in 2022, only 50% of Americans reported owning life insurance, right? Now, all this information that I'm giving you is from studies from, you can look up LIMRA, LIMRA. You can look up bank rate. There's a couple other resources that we'll provide in the video for you as well right here, so you can look at the bottom. But all income levels are now less likely to say they have life insurance coverage. We're down to 50% of Americans in 2022 comparatively to 52% back in 2021. So that means less people are admitting to having it. Now, that's pretty crazy because check this out. So 30% of Americans believe life insurance is for end of life expense, leading them to not purchase enough to provide income replacement or wealth transfer. So you see, this is an example of not understanding there are different levels of life insurance. The 30% who believe life insurance is only for burial are not wrong. They're just misinformed that there's other levels to it. Now, if you know about the other levels but you choose the burial, then perfect. I'm all for it. I'm glad you made an informed decision. But if you're unaware of the other levels, then you made a misinformed decision because you thought that was the all, the done, right? And that's not true. And that's why I try to educate people as much as possible.